Let's move on to the markets in West Africa. We wrap that up. Starting with the BRVM. The BRVM 10 index closed trading on Friday at, or rather yesterday at 211 points. That's up 1.25%. Meanwhile, the all-share index, which is the BRVM composite, gained about 0.8% to 191 points. Total value traded in the market was 161 million CFA francs, while the currency currently trading at 502 CFA to the US dollar. Moving on to Ghana, that market was down about 0.5% to 808 points for the GSC composite, keeping its year-to-date change at around 50%, while the GSC Financial Stock Index was higher, closed at 1,609 points, up about 0.7%. And moving on to the currency currently stable in Ghana at 1.97 cedis to the US dollar. Moving on to Nigeria, the market, really very good day for equities in Nigeria. The market was up 1.75%. The NSE all-share index closing at 35,109 points, so it's now at about 3.5-year high. The drivers really included the likes of Dangote Cement and UAC. Let's now cross to Diamond Bank, where Jude Anele, head of retail banking, is standing by to give us some perspective on the market. Jude, thank you so much for joining us. I think I want to really focus on retail bank, which is, of course, is what you head at Diamond Bank, and your thoughts about the dynamics we're seeing play out there. It's clearly an opportunity for the banks to increase lending. A lot of people are calling for the banks to lend more, given the low loan-to-deposit ratio we are seeing cumulative for the sector. So talk to us about the reforms that we're seeing and your thoughts about the success given the failures of the past, if you like.
Well, the way I would look at it is that when you look at the low loan-to-deposit ratio that banks have, it was driven largely by the very high returns people had on treasury bills and federal government bonds.
Right.
But now that the treasury bills rate is dropping, you'll find that banks most likely will cross over to the risk assets area, which means lending to the real sector again, and of course to the trading sector as they used to do. So I think the recent move by the central bank to reduce the treasury bills rate, and I suspect that also the monetary policy rate might likely come down at the next monetary policy committee meeting. That will also help drive banks into lending to the real sector again, and you'll see an increase in loan-to-deposit ratios in banks.
Okay, so we know that there's a special intervention fund created by the central bank, about 250 billion naira is what I'm hearing, and then of course there's a policy to allow banks use agents to increase their penetration. Talk to us about the likely success of that project.
Okay, I'll take the development fund that the central bank talked about recently. Of course, that is not yet up. It will come into effect towards the end of the year, like central bank announced. That will be about 200 billion naira development fund for small and medium-scale enterprises in Nigeria. But you may go back a bit and go back to the small and medium-scale enterprises equity investment fund that banks started in 1999. Mm-hmm. What you found was that banks then agreed that they will set aside 10% of their profit after tax to invest in these SMEs. But you found that most of those investments that banks did then went all right. Most of them didn't work very well. After that, the central bank came up with the credit guarantee scheme for SMEs, where they guaranteed about 80% of the exposures banks had there, insisting that banks must also lend to these SMEs at their prime lending rates. But we also discovered that banks were shy of lending to those people because they believed that the risk was high. Even the only 20% exposure that CBN allowed them, they didn't feel comfortable doing that. Now, beyond that, central bank also came up with the refinancing and the rediscounting fund for MSMEs. As we speak today, that fund was also for about 200 billion. Out of that, only about 19 loans have been applied for by banks accessing that particular fund. So I think that the approach of coming up with this fund or that fund by the regulator or the central bank to help the small and medium-scale enterprise space hasn't really worked very well in Nigeria. And I think that banks must be encouraged in the first place to find ways of lending to these people. But what you find in these funds is that the central bank still allows banks to use the type of collateral they prefer to secure the loans. And of course, you know the type of collateral that banks prefer to secure the loans. So it goes back to the issues of these SMEs having adequate collateral to secure their loans. So most times you find that it's back to square one. So if CBN really wants to help out, you must also find that the guarantee must ensure that these businesses don't have to come up with this collateral that they do not have.
All right.
When
Well,
it comes to...
if we can come back to, sorry to cut in, if we can come back to the 200 billion Naira fund, like you mentioned, many of these interventions haven't worked in the past. I think the difference this time is that the risk of that, of lending out that money is going to be borne by the bank, so it's not free money. How quickly do you think we could see that, it sounds like a large amount of money disbursed to SMEs?
What you still find at the end of the day, if I remember, when it came to the credit guarantee scheme, central bank agreed to bear the risk 80% or 80% of the risk, and the banks will bear just 20%.
Right.
Now, is it now that the banks expect to bear 100% of the risk that you think that they'll go there to lend? There are fundamental issues in the small and medium scale enterprise space, and that is capacity building. What has happened is that the mortality rate of these businesses is still very high in Nigeria, and that is because they don't lack proper governance. So there's, like I said, there's still a lot of one-man show going on there. The real promoter dies and the business dies. They don't have proper structures, no proper accounting process, no proper banking habits and all that. I think central bank needs to begin to focus more attention to those non-financial needs of this sector, which is how do they build capacity? How do they keep their books? How do they manage their human resources? How do they do their marketing and all that? If these things are in place, you find that then the financial aspect of the services will just key in. I think that the reason most banks don't lend to this sector still remains that the sector is still largely unstructured.
Right.
And we must build those structures before banks become very comfortable lending to them.